Hey guys, so it's me and Pheneck back with Crypto Minds Global, just doing a little update on today's close and video and kind of where price action is going to go. Pheneck, take it away, man.
Hello. Okay, I'll get started. So we're going to start off with the daily chart. And I was mentioning before on how this was important for Bitcoin to close above this level here, mainly because I wanted price action to give me confirmation that this was going to turn into a support zone that bulls have showed their hand and they want to take price up over here, but they did not give me that confirmation because they are failing to close above it. And this, if you go on the lower time frames, you're going to notice that this is merely a stop run, or well, this was the main resistance zone over here. I'm not saying it's a stop run. I'm saying that bulls were mainly hunting for liquidity, which was resting over here on this high and this high, and well, this high over here too, over here. So what they have managed to do so far is take out these highs, like poke above it, and then they're pushing it down. That's what daily is suggesting to me, that this liquidity has been taken and they're kind of, not willing to hold it as support. I still have a lot of time to, we still have a lot of time to see if this holds as support, which was the previous broken resistance in this area over here. One of the main important things I like to see is that when I mark an order block like this, and I call it a resistance zone, the reason I'm calling it a resistance zone was because this order block was responsible for taking price down, taking it below this low, and now it has pushed above it. And you see the candle actually closed above this high over here at 8,446. So when this closed, it means that this order block is now a breaker and it should be acting as support. So if it's acting as support, we're going to take the equilibrium of this order block and mark it out. So the equilibrium comes at about $7,897. That's roughly over here. So this level is going to be pivotal for bulls. In my opinion, I don't think it's going to hold just the way price action is setting up, because we also have a flat open over here, which is not good. And more often than not, whenever there's a flat open and price goes for a liquidity grab, it's basically setting a price action for a stop run, and then it's going to dump over here. I've seen this kind of price action kind of very often, especially in Forex. And even Bitcoin also does that very often. Like you can see over here how when price actually went up like this, it had like a flat close. It immediately went over the wick up and dumped from there. I can also show you a lot of price action on the smaller time frame, which had flat open tricks, usually which are kind of hinting towards like the market is going to go the other way around. Like it has left flat opens over here, here, here. This is not, I would say, efficient. This is inefficiencies in the market, and most likely it is going to act like a magnet for price to retrace. Like when it left a flat open here, market immediately turned, it took out the flat open, and then it went up, but it has still left these flat opens over here. So it kind of gives a hint that the market is wanting to shift. And over here, you can see as well, like market left a flat open over here. It doesn't stay there for very long. Eventually, when it was going and churning up and up and up, everyone was thinking that, we're bullish and we should go up. It went down, it filled the inefficiency, it did a stop run, and now it went up after that. And there's another thing to consider for Bitcoin is that nobody was kind of paying attention to this, but like I said, everybody is kind of focused on BitMEX chart, and they don't look exactly at Bitstamp or Bitfinex. If you look at Bitstamp or Coinbase or Bitfinex, they are actually printing a really good chart pattern, which wasn't exactly visible on BitMEX. Let's see. Okay, so this is the 4-hour chart, and it's clear as the day for now. I'm just wanting to show the chart pattern, and I'm going to go back to drawing support and resistance levels. So what price has been doing is it's kind of printing this downtrend line as a lower high being formed. Like this is the higher high over here, the original high actually. So these are lower highs in succession then after that. Like this. And if you look at the 4-hour chart, it's actually very clear on how price did a liquidity grab, which was over here. Like it should have held above this level. It shouldn't start turning over here. One of the reasons I'm saying that it should go lower is because of the chart pattern, which I noticed, which makes a lot of sense too. Like everyone was calling for, I'm not sure, like an ascending triangle. Well, I think most people are pointing it like this, that they want, this is the thing with chart patterns, they want price to act bullish. So they are going to like interpret it as bullish. And this is a bullish chart pattern if you just don't look at this thing. Yeah, if you just like take it out for now, and you're not looking at this. And if you're just like looking at the blue line and you're just drawing it like this, or if you want to just be subjective about trend lines, you can find ways to make it look bullish. Sure. I mean, this is bullish. If you look at it, then you can say that this is an ascending chart pattern, and the price should basically start going up from here. There are certain signatures in price action I'm noticing, which are hinting towards a drop. That's why I was leaning on towards the other chart pattern, which I showed before, that it should be, this is a valid trend line because it has like perfect touches over here, but there's no discrepancy, as you may see, like it's almost perfect touch. And I should hope that this trend line and draw at the bottom as well is a perfect touch in itself. Like I shouldn't try to pierce through the wicks and keep it as it is based on the trend line I drew up. So one of the important things to note is that in the marketplace, whenever market makers are pairing orders to move it, they don't like to leave inefficiencies. When I say an inefficiency, what I mean is that when we had this explosive move up, I'm gonna actually take this press action away. When we had this explosive move up over here, this was an inefficiency, and market makers usually get this filled. Like when it went up, it came down and filled it up, and then it went up again, making another inefficiency over here. And now they actually came forward and they filled that up too. It was slow and excruciating to fill it up. Like everybody was chopping in the marketplace over here, thinking that we're going to go up now, we're going to go up now. But what really they were doing was they were developing price action for getting their orders filled. Like they did not exactly take it all the way down in one push. They took it half the way down, then made it bounce, get people to place a stop loss over here. Then they churned it, and then they took it down again, stopping them out, pairing their buy orders, and then taking it back up again. Now they attacked these people who had their stop losses placed over here, hurting them so that they would be kind of forced to believe that it's a bull run now. And anyone who is forced to believe that it's a bull run happening, they would be placing their stop loss over here, right over here, 74.36. And one of the important things to notice is that when they bounced the market over here, they did not fill the inefficiency completely. There's still this region over here, which I'm marked in yellow, which does not have any price action, meaning it still has an explosive move. When it bounced up, it from 73.60 till 74.30, it's just like thin air. If you go into the hourly chart, it will be much more clearer. Like you can see over here, it's when it made an hourly push, it left this thin air and it did not come all the way through to fill it. Like I was wanting to long 73.50. I was actually saying it in the group as well for people that I will be aiming for this level to take a long, but market is a bitch. It does not want to come there that easy, that it does not want to give you the opportunity to get on board that easy. And one of the reasons also I cited was that they left this low over here on purpose. They want you to put your stop loss over here so that when they make a stop run over here, they're going to think that this is going bearish. But in essence, what I think they're wanting to do is that they want you to short going into support. This is the support level when I'm marking in green. So when you try to short it like a breakout trader, they would have their like sell stops over here. They would want to get short thinking that, it's going to roll over, it's going to go to 6K. But when I look at this trend line and this trend line over here, it has 2 touches and it's 3 touches over here. So if it's like a perfect symmetrical triangle, I would say that it's going to do something like this. It's going to touch the trend line, do a stop run, and then it would probably go something like this. It's not going to make it easy on the people is what I'm suggesting. And I also have some historical price action data to support this kind of movement, which I was looking at from 2018 pump when it happened. It's very important for market makers to not do a breakout over the weekend. Otherwise, people have like a huge CME gap. And that would also signal that market is not going to go further up. That is eventually, if it does a breakout over the weekend, it's just going to retrace and probably go down to 6K then. So it's important that price action just like churns over here for the weekend and not do anything. Just like stay over here, turning into support. Coming into Monday, I want to see a dump happen, like at least a $300 or $400 dump, taking us till 75, maybe 7, this support level here. Well, it should go to like 76.13. And on Tuesday or maybe Wednesday, I want to see a stop run happen over here. And that should mark the low of the week. What I mean is that when you look at the weekly candle, I'm just going to take it out. Here. So weekly candle, it's looking like a hanging man. Hanging man is literally just like a thing which forms at the uptrend, signaling that the buyers are losing their steam. And it's basically consolidation. It's nothing else. Like market is indecisive at this point. They're building liquidity on both sides of the market. They're building liquidity here, and they're building liquidity on the top. And it's no surprise there's also a huge liquidity pool on the left, which is at 8,500 level over here, going into another resistance zone at about 8,900, and then finally this order block, which is a heavy resistance zone at 10K, also a psychological number. So what I'm thinking is that it should close this weekly candle like this, leaving it indecisive. Then the next week, when I'm saying that it should do like a stop run on Tuesday, I want this low to be taken, and market should do something like this. Like it goes down, takes this low, and then goes up and closes the next weekly candle over here. So trapping shorts over here, leaving this liquidity pool open, and coming like next week, it should do like a pump over here. And when it does the pump, and closes the weekly candle above there, it should signal that this weekly candle is the new support over here. This would become the new support if it does that. And it's okay for price to pull back after like such a parabolic move. Like market can't just like keep going up in one direction for long. That's not healthy too, because as you saw that when Bitcoin did a bull run over here, it just like kept going up and up and up in like parabolic move, and it finally retraced it. That's inefficiency on the weekly chart, and it filled it up till like this order block. And that's what I'm wanting to see, that price does like a pullback over here, which would be like a pullback to this level over here when it did the pullback to 57.39, and then it goes up. So I don't know if it would be like a pullback to 70, this order block here, or maybe this order block. It's very early to say. This is the first kind of pullback on macro scale, which we should be keeping our eyes on. And I actually wanted to show you the price action from the past, and then I'm going to come back and mark other support levels and the resistance levels which we should be looking at before we move forward. So if we go back to 2018 price action over here, before Bitcoin did this massive pump, and everyone was so excited that the bull market is going to start here, really pay attention to what happened here. Okay. So this is one of the stop loss levels which happened here. And this was the bullish order block. Well, this was the beginning of the bullish order block. This whole candle is a bullish order block. I don't think I have to extend it. I'm just giving some context on why market was bouncing here. So what price did was it just came down. It triggered the stop loss of 64.50, and it saw a sharp reaction. Now, Bitcoin is very interesting in terms of showing price action on when it has taken out stop losses. So I'm just gonna take all this out and work with this. And I'll show you some very peculiar features on how price was acting over here. So if you look closely, whenever market is dumping over here, it would have stop losses residing over here. The moment it bashed through it and saw this reaction up, it means anyone who tried to short the market over here, they are trapped. That they would be sweating about their short positions, and they would have the stop losses over here and here, and they got taken out. So this was actually a shift in market structure to the bullish side over here. And even though the daily chart was looking very, very ugly, that it wanted to go to 6K, this was the first warning sign that market makers are now wanting to take market down. And one of the key characteristics of price action is that once the previous lows are broken over here, so when this swing low was taken out and market dumped and then rallied up, taking out these swing highs, that was the shift in market structure to the bullish side. Now, when this swing high was broken and everyone may not be bullish, they would still be thinking that, you know, it's going to test resistance, it's going to keep going down to 6K. There were a lot of hints given by price action that bulls were not wanting price to go down, and we'll see how that happens. So one of the other things that I wanted to point out, that when you're pointing at an order block which has just taken out a liquidity pool and you fib the order block, you should be marking out its equilibrium level. This is an important support level. It's very, very sensitive to any kind of price action, and you should be keeping an eye at this level. So do not expect this level to be broken very easily. So we are going to keep this as level of interest when we look at price action as it comes down. So we're going to go into an hourly chart now, going back to the same date. Okay, March 2019. Okay. All right, here. Okay, good. No peeking over here. We're supposed to act like we don't know what price action has been doing. Now, if you remember, price likes to fill out any inefficiencies. So this was the inefficiency which the market left when it exploded to the upside. As you can see, the price actually retraced and it filled the inefficiency. Now, obviously, it's going for this inefficiency over here. It's going to be filled when it comes to this order block down over here. And it's also at this previous low. So our job over here is to think like, this is a very, very nice RR ratio. All you got to do is like have your stop loss over here because price should defend this low because it has already done the stop run over here. It has taken out this liquidity pool. It has broken the market structure to the outside when it took out the swing high. And when it comes down here, it is filling this inefficiency, which I had marked. We have the EQ of the level at 65, 67, and we have an early order block over there too, where this explosive move happened. So we're going to see what price action is telling us when it comes down. Look at the reaction from the order block. Like it hit it right to the exact dollar, and it just like bounced from there. So that's telling you that price actually is being very responsive to the order block. Now I'm going to take this out because I think you get the idea. This is a daily order block. Now take note of this region here. It left this liquidity void on purpose. This is an area of inefficiency which has been left, and price literally just like bounced maybe $50 above of it. Now this is important. It's not just a coincidence that they did this. Now they took out this liquidity pool. I'm thinking they're going to go fill out this inefficiency over here, which is an explosive down movement. Now it's still responding to this order block. I don't think it's relevant at the moment. What you should be looking at is that it's forming a bearish chart pattern here. I think most people would be looking at it like, you know, this is a symmetrical triangle or a bearish pennant that price has done an explosive move down. It's consolidating, or, you know, they're probably on a market like this with the body of the candle. They're thinking that this is the final straw before price actually does like a huge dump. And this price action is still over here. It hasn't been filled, and we still have this explosive price action which hasn't been filled. So we're going to keep that on the eye too. Now it goes up, it touches the trend line again. Look how tight it has gotten. It gives like a false breakout kind of thing. It took out this liquidity pool here. Boom, this drop. Now this drop over here, it might have everyone convinced that we are actually going to 6K. Like even I was shorting at the market that time, I remember, because I was new to the market. I did not know much about price action back then. And I was short at the market over here. Now look what it has done after it filled the inefficiency. We are in this order block region now. Okay, move. Here. Now, whoever tried to short the market below this order block, they got bamboozled, I would say. That they were led to believe that the market has flipped bearish, and they were thinking of it's going to 6K, but it actually gave them a big fake out. They were shorting into support. The support held, and it bounced up again. Now, if we go back to 4-hour chart at this particular price action, again, I'm going to show you something else. Okay, good. Now, like I may have mentioned to you guys earlier, that market loves to fill inefficiencies before it does a reaction. Keep note of this inefficiency over here. It still hasn't filled it. It's still an explosive downturn up till this level. I'm gonna mark it with blue, let's say. Okay, and it has this inefficiency over here to be filled. Now, we have already seen that it formed a bear chart pattern, did a dump, took out this low. It failed to close any 4-hour candle below the EQ block, which we marked at 65, 67. It touched the hourly order block, filled the inefficiency, which was over here, and it bounced. So if it has broken this market structure, when it fills this inefficiency, it's going to be very, very explosive. Like what you can do is if you were long over here from the EQ, your stop loss is over here. You can move your stop loss here because it has done the stop run over here and it has bounced over here. So it has no business going below this low now. It filled some of it down again like this. And it came down to fill this price action. Now it's filled. Like if you wanted to go long, you could go long over here again. Place the stop loss here. And that's the breakout. So time and time again, market makers were giving us hints on how they are respecting supports, taking it up, breaking the market structure to the bullish side, and then they formed a higher low over here, took it up into this order block at this region over here again, before they did a final pump. Now, it seems like, that this is all hindsight, that people can say you just looked at it and you can predict it in lifetime. I can agree. I couldn't have predicted it in lifetime because I did not know about price action back in 2018. I only learned it after, crypto took me out quite a bit out in the bear market, and I started focusing on Forex price action. So after learning a good deal of Forex price action, I came back to these charts and I was analyzing them again a year after. It all made so much sense on how they were, respecting supports, taking out liquidity, and this was a break in market structure to the bullish side. After that, they have just respected supports, and this was like an opportunity for them to say fuck you to all the bears before they took it all the way over here and then we dumped back again. So hopefully this gives some perspective on what we're doing right now. I'm just going to come back to our original price action over here. What I showed you from previous price action fractal, that's what I'm trying to suggest over here, that this liquidity void, which has been left, this inefficiency, it has been left there on purpose. There's no way they just leave it over there and then they take the market when it has been like churning all the way, filling all this, when it went up, it filled all this inefficiency up till here, then they bounced, and they can't just like leave this inefficiency over here and make them think, the market is going for 10K. They're probably going to do like a final straw thing where they do like a massive drop, like create a big liquidity void to take up these stops, and then they push the market up. That's what I'm thinking it should do. But in case it just leaves this low over here, that's the bullish price action I was telling you, which I want to see. But in case it gives me bearish price action, which would be like, it takes these highs out. This is massive liquidity pool here, and then it dumps here and it retests for resistance. Then I'm thinking that, we're going to take this out and we're probably going to go to 6K from there. I'm going to take this out over here. So if we take out this liquidity pool first before taking this one out, then any rejection from that liquidity pool to come down, I'm going to short the retest of this, and I would be targeting these lows over here. Like it's classic sell model pattern, which also happens again and again. Like it's the same thing as, when you're trying to short support, but like this is an inverted chart. If you try to short support and it kind of gives you a rejection and it comes back above the support, these all orders are trapped. They're trapped into thinking that they were shorting into the breakout, but the breakout failed and it comes back up into the pre-breakout zone and tests it for support again, and this starts going in the other direction. The same thing it can happen for shorts too in real time. It's just our bias is like uber bullish that we are not led to believe that this could also happen. So that's something to keep an eye on for Bitcoin at the moment. And we have already closed the daily candle and it's below this high. So I'm thinking that this is less to do with a breakout. It is more like a stop run. If I'm wrong, then we want to see the next daily candle to close above this level. Then this down candle would become a bullish engulfing. Then we can actually target 10K or this liquidity pool at 8,500 before going up. But so far, my expectations are that this liquidity pool gets attacked over here on the daily. Like they have built up nice liquidity over here on the daily too. And this SR level, if you just mark out this open, you see how it hasn't exactly touched the open over here. If you go back on the daily chart, there's no coincidence that this high was formed over here. Like opens and closes of bullish order blocks, they're very reactive. I don't exactly expect this bullish order block to break yet. If you were to put a gun on my head and say which way price action is going to go, I'm going to say it's going to retest this order block and then shoot up. But that's my plan A. That is going to be my plan A. I'm just going to wait for price to come here and take the longs over here because it's a nice SR level. Like you will see even from 2018, which we were discussing for the fractal, even that high over here was formed at 74.29. And then this high over here on 2nd September, which also had this breaker, which price reacted to. So it's an important SR level. It's not easy for market makers to just like, do one single touch and then take the market. They want to churn the market down to you, taking every last bit of seller out. Then they retest the support, and then they're supposed to take it up. So that's all for Bitcoin. If we go on to Ethereum, I was actually mentioning on how Ethereum is also turning. This big wick actually throws me off quite a bit.
Look at that retest.
Which retest are you talking about?
Just on that chart, the one you just showed before that.
This one?
Yeah.
Yeah, if it was a retest, I would not have considered this like a valid bounce because these candles are too small. It's not like a huge upthrust candle making this a bullish engulfing. I would have, if this was a valid retest, it should have closed above this candle over here at 261. Then I would have known that this level is going to hold. But so far, it kind of looks like market makers are just building liquidity to take out these equal lows over here. Which like there's no such thing as equal lows in the market. They're just over there to make retail traders think that it's a strong support and they should be longing it. But in fact, they're building liquidity for people to, like anyone who would be long in the market, they would have their stop loss over here. They would be thinking that market is bullish at the moment and these lows are not supposed to be taken. And time again, it happens is that they're going to be attacked before market makes any move up. I'm not saying that it's going to go into like a bearish market kind of stuff, but I'm saying that these equal lows should not be there in a bullish market, given that it has not broken the market structure to bullish side yet. What it has been doing is form lower highs. If you notice that when this candle closed, it has failed to close any daily candle above it. It has just been like, pounding, pounding, pounding. So it's about time that it takes out this low and then gives us a bullish engulfing. That would be the bottoming pattern I would be looking at. But if I go, I actually don't like this wick, so I'm going to go to Pheneck chart. And it also is pretty much the same. I'm going to start from a new chart. Okay. So if you look at this region here, this was a classic trap for people to think that Ethereum is actually going down. Again, coming back to the theory that market does not leave inefficiencies intact. When market did a pump over here on the daily, it left this portion unfilled when it did the retrace. It should have come all the way down over here to give fair value, but it did not do that. So this leaves, this particular region is very, very reactive, given that there's a bullish order block over here too. If you go to the 3-day chart, you're going to see that. Well, no, you don't. There's no bullish order block formed here, but so market, what it did was, just like I said earlier too, there's no such thing as equal lows. I tried to print over here that market has turned bullish by taking the market up. It did not come and take out this low over here. And then it went up, tested the resistance, and then finally did a dump, taking out the liquidity pool over here, filling this inefficiency, and then it resumed the bull run. Like it went parabolic after that. So what it does is like it makes our job easier because we know what our invalidation level is. If these lows are taken out and it has pushed forward from it, it means that this is a bull bear line for us. Like we should be bullish if it's above it. We should be bearish if it gets below it. That's the line in the sand for me if Ethereum has the continuous bull run. I'm not saying it's going to come all the way down over here. I'm just saying that if ever it decides to do like a massive retrace, this would be the bull bear line for me. So this is a massive support zone for now. But as far as continuing the bullish momentum goes, this is also an important level to look at for Ethereum, which it has already tested successfully and went above it. This was the daily breaker, which it broke past. Like this was the bearish order block, which made the market dump. And when it finally came back up, it took a decent amount of time to close a daily candle above it. When it finally closed it, like this was the break in market structure to the bullish side. If you wanted confirmation that you are like a long-term investment hedge fund bank and you want to take like a positional trade, this was the time to take the positional trade. When it closed the daily candle up above this breaker, it did a retest of sorts, but not quite. Like it should have tested the body of the breaker. But regardless, it did a pullback and then it started going up again. So where do we get in is the real question. Like where is this market going to go up till before it starts going up? So if we flip the whole move, this 50% level gains my attraction. Like it's standing in a no man's zone at the moment. Like it's just churning. If you look at the daily price action, this is not trending environment. It's just setting liquidity pools to attack. As you can see, there's lower highs over here. There's going to be buy stops residing over here. And then there's equal lows over here. There's going to be sell stops residing over here. So until the market makers actually make a move to take one side or the other, we can't say much about what Ethereum is going to do moving forward. But if I were to look at high time frame perspective, this is a very important level, $213.94, mainly because it's a very decent SR level. This was the top before Ethereum actually did like a massive breakdown. So we broke above that top, but we haven't exactly tested it as resistance yet. It just like broke above it as churning. So when it comes down, I expect this level to hold support. And you can see 0.5 Fib also agrees with it. If we go to the 4-hour chart, there is this bullish order block just below. Hold on, just below this 0.5 Fib too, which is holding, which should hold as support. If it were ever to come down here, it could literally just, I'm gonna take out this Fib because it's getting messy. This is the intermediate support, which I expect to be held. One of the important things to note down over here is the concept of leaving liquidity voids. This is a very thin zone, which it has left. But if it's very thin, I'm going to mark this with yellow. Over here. So what market has done over here, when it broke above this consolidation, it did not retrace it to test this, but it formed another support region. And as it broke above here, it went down. It should have went down up till this high to retest this resistance for support, but it just stopped midway and left this fair value gap. Fair value meaning that this down candle did not fill up till the high of the previous candle, so there's empty air inside over here. And the way they are leaving these equal lows over here, or over here too, it could be considered like a stop run. Yes, it was a stop run before it went up, but it hasn't exactly broken through the resistance zone. It got rejected our resistance over here. Unless it does something like this, just goes up here, retest for support, and just like this. I don't think that the low is in at the moment for Ethereum. I think it's going to go for these equal lows over here. They just look too good to be true, or the way it's set up on the daily as well, with this fair value gap and the 0.5 Fib over here. So if you were to defend this level, I'm going to take this out. This is the 0.5 Fib of the whole move. But if I'm talking about, I don't want this low to be broken, that this is the line in the sand before commencing the next bull run, I'm just going to take a Fib from that low till the top we saw at the moment. Over here. So one of the Fib actually lies at the fair value gap. So this is an important thing to realize, that this level is going to be extremely sensitive. It may or may not get till 213 level. I would be very happy if it gets there. I would be happy to long it over there. But you need to keep an eye on this zone as well. If it does something like this, if it comes down, hits it, and gets above it, and tests this for support, and makes a higher high, I will be getting in for a long position. Basically, I want this liquidity pool to be taken and go into support, then reject it, and then go up again, and retest it for support, and then go up. You may think that this is very subjective, that I'm just putting it out there like that. I can actually give an example of how price action like that usually plays out. There was a trade I took with ADA, which had very similar price action, as I was pointing out. So this was, I'm going to take out the start. All right, let's just go to the weekly chart. So for ADA, this is an important SR level over here. I think you'll agree that this SR level has been defended for quite some time. I was expecting it to hold as support, which it is doing in fact at the moment. And I also wanted it to defend this order block, which is a bullish order block over here. All right, so if we go down to the daily chart, let's say we don't exactly look for, let's say we don't know this, okay? So most people, what they would think is that, this is a bullish order block on the daily chart, and it should have held. I'm gonna mark this with yellow. There's nice equal lows over here. You take the liquidity out, and you should have entered long position here. I'm not so sure about that, to be honest, because higher time frame rules lower time frame. That's the absolute law of trading, I would say. That if you're looking at something which is on a high time frame, it's most likely going to ignore what it's doing on the lower time frame. Lower time frame needs to align itself with higher time frame before you can actually enter a trade, is what I say. And I actually do a lot of mistakes that I don't discipline myself to follow my own rule sets. The emotions get ahead of me, and I do make mistakes based on that, but it doesn't necessarily change my ideologies if they work or not. So let's see what it does over here. As it's coming down, you see, it did not even do anything to this order block. It just like smashed through it. So this means that our thinking that this bullish order block is going to hold because there are equal lows over here is failed, but it should not be doing that. So it brings us down to this weekly order block. And in this weekly order block, we have this daily order block, which should hold as support. Here, you see a reaction over here. So now what I'm going to do, I'm just going to go to the 4-hour chart, and I'm going to take this out. So what I was explaining earlier about how the concept of equal lows and how they're left in the market to generate liquidity and how we need to take them out. And I was mentioning how price should do something like this. And if it rejects it and comes above it, I'm going to get on the retest of support. This is one of those examples where I saw the price action happening in front of me and I actually took the trade by myself. So let's see how it looks like in real time. Okay, I'm going to take out this weekly order block because we already know where it bounced from. Now, you should know that we're in support zone. I've already mentioned it. It's on the daily order block. And I just want a signal to enter market long. So these equal lows are taken out. Now, I'm not entering long at the moment, no. I want market to prove to me that it actually wants to reject these lows and wants to go higher. This is my proof that market has rejected these lows that wants to go higher, because there's a nice reaction after rejecting these lows that short traders have been trapped, and it did a bullish engulfing. So how I'm going to enter long is on the retest over here at 953, and my stop loss would go over here at 908. This would be my stop loss region. Okay, and this would be the buy limit. I'll just place a buy limit over there. I'm not gonna monitor the charts. Just place a buy limit over there. Let your emotions do something else, and we're gonna see what happens. So I want this to hold support now. That's what I'm betting on, that the low is in, because it saw a nice reaction from it. There was a nice rejection. This is what rejection looks like after it takes out this low. I entered the position, and now it went. See, that's how I want to see Bitcoin do the same thing. I want to see Ethereum do the same thing. You take out equal lows, you see a nice rejection from it, and you get on the retest here, and your risk goes over here with the stop loss, because if it goes back here, down over here, you're most likely wrong, and you don't want to stay in your position on the wrong side. This stop loss is over here to protect your idea. That's it, plain and simple. So these are the three kind of trade setups I was looking at, and I think Ethereum is going to play out the same thing, or I would hope it does the same thing, which we're looking at over here with these equal lows over here. If it comes to 215 level, I will just click market buy over here in hopes of that it's just going to reject from there, and my stop loss would go over here at 201. But if you really want confirmation, you can wait for price to come down, reject it, and then go up based on the example I showed you with ADA, and then get in on the retest. That's another method to do it, and it's much safer. That it gives you, it basically is like showing the hand of whales. That's the footprint you look for, how the whales are trading. So I want to see Ethereum come down, take out this equal lows and reject it. I made you see how the rejection looks like, and then get in on the retest and then do this. Because at the moment, I'm not sure if Ethereum wants to bounce from here or maybe bounce from here. I'll just wait for the whales to show me their hand. Maybe it can continue going up from here, but that's not my plan at the moment. My plan is to wait for a retracement to occur. And I'm not wanting to long it over here because it just got rejected from this resistance zone over here. So this resistance zone is the defense line for bears. If it breaks above here, then I would think that the low is in, and I'm going to get in on the retest. After that, I think it's just going to continue with its bull run. It's not going to waste its time churning around. But as it stands at the moment, this is being respected as resistance, and I think further downside could happen very soon. Maybe on the weekend, maybe in next week. We'll have to see that. And I'll pass it over to you to discuss some charts, if that's fine. Are you there?
Oh yeah, I'm here, man.
Okay. So you want to take over?
Yeah, I'm just super tired. Good job, man.
All right, no worries. I'm going to stop sharing now so you can go ahead.
Yeah, I was just watching some stuff you were doing. Right now on the daily, I'm just watching between these two levels right here. But really what's going on is like Pheneck said, is basically when we're in a 3-day range like this, like a 3-day candle range, that's a really big it's a really big resistance zone right here at 248. It's a previous high of this range here. Basically that it lasted, let's see, my computer's been a little slow. This range lasted 63 days before breaking down. So you could go to 2-week chart, and you see this range right here, this big bodied candlestick is basically was one of the bearish order blocks for Bitcoin before it took its dump. Now, what I want to see is us trade into this thing and then either start trading above above this resistance zone here, I'm gonna start trading above it, or so that 2 week range that he talked about. Basically broke it down the same way. And you can go down on lower time frames and you see the 50% equilibrium here on that order block retested and then went higher. But what I like to see is it trade down into the 75% range, which basically would trade into this 3-day order block right here. Bam. So I'd like to retest that, which would be the breaker. And so that'd be around 210 on Bitstamp, which I wonder what that is on the other exchanges. But that's kind of what I'm looking at for Ethereum. We could top out here at the top end of the range, come back in to test the equilibrium, which we already did, but sweep those lows, come into the 75% retracement, and then start taking off. And that's what I'd like to see on the higher time frame as well, is just a retest, basically just a bottoming retest of support. And so even this week, we've seen a ton of these coins on the smaller time frames. They come back and retest. They came back and retested that 75% retracement, and basically the optimal trade entry. So really, we're kind of just breaking it down on smaller time frames for you guys. Potentially see a leg down, which would be about a from here, maybe a 15 to 20% drop before taking it higher, or we could break out here, depending on if we see some bullish price action, like he said. So moving on to Bitcoin, real quick. So this is our previous chart. We had our longer term time frame chart. We're looking at the 12K area range and the 10K area range for longer term targets to hit. Shorter term targets, potentially a breakdown. Now, price can retrace 30%, and we have seen it in the past retrace 30%. And the start of the bull runs. And so potentially we see this huge 8K resistance zone marked right here, right? And so this is our huge 8K resistance zone. And so we're currently bobbing around over here. And so potentially on the 3-day chart, we are making another range. And so we've been ranging for a while now. And so we've really kind of just been undecisive of what we're doing. We're obviously bullish and we're in a bullish trend. And so any pullback is for buying. And as we've seen, the bulls are defending the price, but also that those bears are defending that 8K area range. And so in this red area here, potentially we do have a pullback opportunity to buy for me. We traded above this breakdown area, so I would be looking for a potential pullback for a trade opportunity. Maybe to the 0.5 or 75% retracement level. And so that's just on the smaller time frame, but I'm kind of just more longer term perspective, as I'm a longer term bull. And so I think we've bottomed, like I said in the previous video. We're currently in a ranging market right now. In the past couple of days, we've been trending. We've been in this massive bull trend, and we've had a nice 15% pullback to 25% pullback. And so now I'd be expecting us to continue higher after another pullback potentially. So we're really kind of watching these levels. But for me, I'd like to see us. I'd like to see us hold the $7,500 area now for the bulls to stay kind of bullish in this range, and to potentially break out soon. So I'd like us to defend this pullback and continue to trade higher. And so that's kind of what I got for us right now. Other than potentially we do have a potential 30% pullback coming. In the meantime, either we hit 10 to 20, 10 to 15, 10 to 12K right here, and then have that 30% pullback, or we have it now, and we can pull back to the $5,700 area. But any pullbacks for buying, in my opinion, and I could kind of go over some other coins right now, but I think the video is pretty straightforward with Pheneck's analysis. We did catch a nice Ethereum trade today with Pheneck, and I think my Ethereum trade went pretty well the other day as well. And so,
It was good.
do what?
Yeah, it was pretty good.
And so, really, I'm just kind of tired, but I think that we could break up. But like I said, I want to see if this holds, right? Now, if they start sweeping these lows, then we're gonna come back and retest. Put my magnet on. So we're gonna need to hold this low, right? And then we're gonna potentially have to hold this to make a pullback into this area, and then to higher if we're gonna go higher soon. Now, if that gets scratched off, then we're going to need to defend this 7K area. It could get ugly if we do sweep those lows, as we might sweep the $7,200 low area. But we are in this ranging market where on the 3-day chart, we are basically creating these inside bars. So you created this inside bar for this candle, and this inside bar to this candle, and now you're creating this inside bar for this candle. So it's been consolidating for 3, 6, 9, 12, and potentially 15 days now. And so price, and on the 2-day, price is still cooling up on these inside bars. And so I'd like to see the bulls maintain the $7,500 area. But we're expecting a very big move soon, 10 to 20% move in the upcoming days, in my opinion. So as price starts squeezing together and coiling up, it creates this basically this cooling pressure, and then the explosion happens. Kind of like so in this range here that we accumulated, it just coiled up and then exploded, just like the 6K kind of level here. It started coiling up, right, and then exploded to the downside. So really, prices can range for a while. And so if you're constantly trying to get in and out of the market with your long-term holdings for Bitcoin and Ethereum and whatever it is, you can, like Pheneck said, you can easily get shaken out of the market. You can see price come down. You might want to sell. You might see price go up. You might want to sell too early. But I like to just take a deep breather, zoom out on the weekly, look at our nice bull trend, created a kind of like a V-type bottom, a U-type bottom, and to me, this was a massive fake out to gain more Bitcoin for the market makers to take this thing higher. Just my opinion. And so on the higher time frames, we're in a still a massive bull trend. And so even just a big 10 to 20% pullback, maybe potentially 30% pullback, which I think is really going to be a drastic pullback for a lot of people because they might not have experienced this pullback before a bull run. It's going to happen, folks. I mean, you go back to any of the previous bull runs, and you see constantly 2015 after it bottomed, you see constantly price cooling up in this tight range over a 2-week time period, and then exploding up 40%. It cooled up for 2 weeks, exploded down for 20%. You think a lot of people sold their Bitcoin thinking it was going to zero or $50 or something, you know? And so a lot of people are going to get shaken out, right? And so you have to zoom out and you got to say, all right, where do I think this thing's going? Where do I trust that we've hit support, that I've seen the accumulation happen? And is it time for us to go on this bull run? And my opinion is yes, it is time. And basically, based on my analysis of on-chain investor capital flow, with regards to Willy Woo and with regards to a lot of other people and analysts in the space, they've had this amazing data come out. And so we're allowed to use that data, and we're also allowed to use our fundamentals analysis and also technical analysis of price. And so we see where price has come and touched into our support zone for pre 2018 levels here, bounced off of it, accumulated for, I would say this was an accumulation stage right here from July 18 all the way to February 2019. That's almost 200 days. And how I think that we've accumulated at this range here is because we literally traded above this range here. So price was cooling up, exploded to the downside, hit support, we accumulated, exploded to the upside. The on-chain data suggested that we started accumulating around August, September, May, October, and even as we were falling and then in these areas. And so, yes, we're at this massive resistance zone. We can pull back a massive amount to about 6,600 to around 5,700, where the 200 MA is coming, and also where a lot of the Bollinger Bands are also supporting the Bitcoin price. Now let's see. Let's just see where they are. I don't even know if I have them on here. Yeah, I don't. But basically, the area of support is going to be around 5,700 to 6K area. I still think we're going to be ranging for a little bit while longer, but we could potentially see a move soon as the 3-day candle just closed an even tighter range here. Potentially either a hanging man or hammer, which usually hammers happen at the bottom of the downtrend, right? And I don't think this is a hammer. I potentially think it's a hanging man. So I think we may pull back. But as we see, we are holding this. We are holding this swing low. We're holding this swing low, and we are holding this swing low. We've held the swing low. We've held the swing low. We've held the swing low. And I am potentially suggesting that we might hold another swing low to continue higher. Now, that's just how trading works. So if we start sweeping these lows, I would suggest that we hopefully hold 6,900, which would be in the range of this daily chart right here and the 3-day chart. See the range right here at 7,200. And so, yeah, that's kind of what I'm thinking is we're going to continue ranging until we break either one way or the other. And hopefully you guys are ready to buy the pullback, or you're ready to hold for long-term growth and potentially this 10 to 12K target that we have up here. So that's where my eyes are from bigger perspective. For Ethereum, I had a chart somewhere, but longer term play, I am targeting this $400 area. Even potentially this weak magnet. Anyway, I'm targeting eventually $400 on the weekly chart here. As price broke down from the $470 area, and our previous support was around 375 to 406. So we were looking for previous support to turn resistance, but we are going to be targeting previous swing highs on the way up. So on the way up, let's see our previous swing highs. So right here at 255 and 217, both were hit by this candle here. Previous high at 160, tagged, and continue higher. So next target potentially 310 for Ethereum. After the 310 mark, I'm looking for potentially.
Yeah. 350 should be fairly easy for Ethereum to achieve.
Yeah, eventually, like I'm looking at like a longer term play here. Potentially, if we get that nice pullback trade into that breaker, $216 on Bitstamp. I don't know what it is on Bitfinex, but I would like to trade up to the $500 range. I know that sounds crazy, but we do have this resistance here, but we might get a little chop and then push higher. But potentially, I'm targeting, longer term, $1,400 for Ethereum, right? I mean, there's no way in my mind that we don't get there, but we don't want to get too ahead of ourselves because we don't want to, say that and then have to wait another year to get there, right? So shorter term, we just hit some resistance and we're potentially ranging and potentially pulling back before we go higher. And so we have had pullbacks for Ethereum as well. We are tightening up, coiling up for a move to the downside to around the $200 area or to the upside around 350. And so, yeah, that's kind of it for me for Bitcoin, Ethereum. Litecoin's kind of the same thing. All these coins, XRP, and then we kind of did some altcoins the other day, I think. But yeah, I mean,
That's good.
Yeah, you did a great job with the ranges, man. I mean, I couldn't even said it better. So.
All right. Thank you very much. Hopefully the members also understand it properly. If they do have questions, they can always contact me in Telegram.
You can always contact Pheneck and Telegram, and we do have some cool little videos coming out for you guys just to give you some updates, but also just an encouragement that potentially as we break up here, there are going to be some pullbacks, but they're all pullbacks to buy because to me the trend's up. And so as the trend was down for a long time, tables are turning. And so yeah, man, let's conclude it so I can get some sleep.
All right. Yeah, definitely.
All right, man. Thank you so much.
You're welcome.
Crypto Minds, we will see you guys on the next episode.
See ya.